Hi, this is Shane with the Rational Trader. It is Wednesday, the 13th of June, FOMC day. I only traded the morning. My result for the day is plus 230. I was expecting choppy sideways quiet action and was kind of looking forward to it to see how well my anti-chop system or chop avoidance system works. And so if I look at what I see here, this is the open here, the green line. I kind of like what I see. The blue means no longs, and then red would mean no shorts. And then when they overlap, meaning neither, you get this purple color. So as the market opens, you'll take shorts but not longs. Now I don't start trading until 6:35, which is right there. So at this point, there's that I agree with that. That looks clearly sideways, right? Don't take longs or shorts. You're about to set that point, and that's significant for me because algorithmically, it's far away from that point, which means just the way that I've designed this, I'm no longer chopping to the downside. So I think when we think about the market is choppy and sideways, we typically mean just stay out completely. But that's not what I've done here. What I've done is separated it out, long and short. And I did that for two reasons. One is that it's not unusual for the market to trade in a range, and when it does, you actually want to be getting in, long at the lows and short at the highs. So longs and shorts are fine here as long as they're in the right spot. You wouldn't want to do it in the middle, right? So what I used to say when we were discretionary trading was you need enough room to get to scratch. But it's actually more than that, because when you're in the middle there, the randomness goes up, so the unpredictability goes up, and so any trade in the middle of a range like this is basically flipping a coin. All right, we'd like to do better than that if we can. And so when we get this kind of action here, that no longer looks like that, right? And so, I don't have a level on the short side that the market has decided on that it's going to defend. And so now I can take shorts, and that's why this goes blue right in here, because this point gets set when that bar finishes drawing. All right. So what this means is that I can take shorts now, but not longs. So if you look at the longs, these points are pretty close together in space. If you look at this distance here, that distance is only 8 ticks or so. Let's see. Yeah, 8 ticks. And so what I've done is made this configurable. How far away do they need to be in price to consider it a level that you want to start thinking about the market's chopping, or the market has a resistance level or a support level that you want to respect. Okay. The other problem is, well, if you're dealing with this kind of action, how big does this line need to be? How big does this distance here have to be before you'll go, I'll get involved now. So that's the second parameter, is the height of the range. With the first parameter being, how far away do these peaks and valleys have to be from each other to consider them related. All right, and so I've got those set up as input parameters. So that's what this is. How many ticks away do they have to be from each other to consider it a level that is related to each other, and then how big a range am I before I'm willing to get involved. And what I find interesting about today is that these values here are 10 and 40, and I pulled those numbers but from the action we've been dealing with, and it occurs to me that like today was pretty quiet. The overnight range was less than 30 points. We were expecting it to be quiet, and I look at, say, this move here, this is before the open, I look at that move there and I go, gosh, you know, visually, that looks to me like that's a break, and I ought to get involved. Okay, so something I didn't mention yet is, you know, we talked about how there's actually 3 values here that are involved. How far away do these points need to be considered a level, right? How big does the range have to be before you'd consider getting in, going the other direction? But then there's also this case here where you've now broken out. Well, how far do you have to get away from that level before you consider it a breakout now? Okay, and now you're willing to go. All right, and it's kind of the same thing. Is that what I did was I set that value as twice the value of whatever constitutes a level that you want to respect. So I have this set for 10 ticks between these points, so that means you got to break 20 before I'll consider that a real break, and now it's time. And now I'm willing to actually put money on at risk in the market. And when I look at this here, that looks pretty decent actually. All right, but when you measure it, it's not. Okay, when you measure it, it's less than 20 ticks. It would have to be 20 ticks before I would say, okay, now you know we've got to break lower. And so it's something to think about. Currently, that's it's configurable. And ultimately, what we want the machine learning system to sort of figure that out for us, as opposed to us, plugging in a number. I just don't know what that number is yet. So it's something to think about. All right, so let's get back to today's action. And what we have here is, the index opens up and it's sideways and choppy and ugly, and we're just kind of waiting. We do set that point, which suggests that from algorithmically, that the low side, the short side is not lined up. All right, we don't have a short range anymore. We're willing to take shorts is really what that means. So this is why we go blue, because the red that's underneath or on top has gone away. So that's a 251, which is a failed break. All right, so the system sees the break through this level, and the prediction is failure. So we wait for a down bar, which we get right there, and get filled there. And it was actually sort of interesting the way this worked, because the market had been quiet, and it spent actually a fair amount of time before it completely drew this bar. And I moved my stop to entry -10, or rather the system moves it because it's all done automatically. And then just very quickly, boom, it jumped up and took me out for a 5-tick loss. And then rolls over. So that was a little disheartening. But you'll notice it when it popped through like that. Okay, we're no longer chopping now. So as soon as this level gets set, we're far enough away in distance from the previous peak that okay, well this is not choppy now. All right, so we're willing to take longs. The short though, you'll almost immediately set that level right there, and so this is why it goes red, because hey, it looks like you've got a level to the short side now. The way to think about that in terms of choppiness is I need to be far enough away from that support level before I'm willing to take a trade. Right? So we talked about, well, what is that distance? Right? It's currently set for 40, which seems too big for this day, but it is what it is. The 154. So we get a long here, actually. Okay, this is a tragic story here, because we get just enough to move our stop to entry -5, and then we get one more tick and it goes up nicely. So that's kind of painful. So I got stopped out right there. All right, but there is a 154 right there. Okay, now here's the problem. Because this level here and this level are very close to each other, right? They're only a couple ticks away from each other. That looks like you're still just chopping. And so no trades here, even though this turns out to be a really nice breakout. All right. So the way it works is, as we discussed, we either have to get 40 ticks away from the previous. Is that right? I said that wrong. We need to break out now from this level by 20 ticks, right? Before it's okay. Now it's okay. And that starts happening actually right here, which is why we close beyond 40 and then close within 40 and then finally off we go. I'm sorry, 20 ticks, not 40. All right, so I missed this trade here, this signal here. Though I had the members that aren't using this method here, this chop avoidance method, did take that trade because there's enough. The old method sees this angle and says, okay, that's enough of an angle to trade, and goes ahead and takes that trade. Now they also took. Actually, I'm not sure if they ended up taking that short or not. But in any case, they got that trade nicely. So this is something to think about, that we can implement rules that make a lot of sense and that do a good job of identifying conditions where there's more randomness in the market, right? So when the market's just drifting sideways or chopping sideways, another way to say that is it's just gotten random. There's not enough volume. There's no direction in the market. There's not enough volume in the market. It's easy for small amounts of volume, small eddies in the stream, to push it one way or the other. And so as we've been talking about building this system and in the room, one of the things we discussed was that the number of times that you sort of randomly get a decent signal in sideways conditions is, that's unknown, right? So the current method takes a long time to catch up before it realizes, okay, things are choppy now. Whereas this method is really quick, very quickly identifies, like right here, very quickly sees, all right, you're choppy now, be careful. Whereas the old method, you're way, because this move is so sharp and you're using lagging moving averages, it takes a while for it to catch up. And so you're getting caught in the beginnings of the chop. Here, though, it works against me, right? So because there's a nice trade there. What happens here is that, okay, first of all, let's note that we open up here. All right, it's all black now. Shorts, longs, everything's on the table now. You're no longer chopping sideways. There's no obvious resistance, or support level that's in your way. You can take trades. I get signals here and here. They're in the too aggressive category, so I don't take those. We pull back really deep. That's a deep pullback. What is that? 72 to 60, 12 points. And then when we break through up here, I get a nice 141 long, that's a breakout long that is predicted to succeed. So I got in right there at that triangle. All right. And as a human discretionary trader, that would be tough for me to take because the market has already moved this 12 points just to get to that break level. So I would struggle to take that. System doesn't have that problem. And then in fact, we get some movement in here, and we add to the position right there. Okay. And then the question is now, am I going to get continuation or not? Because what the system does is when we enter here is an 80 tick target with a 20 tick trail, and then when we add, the break even is now here somewhere, and we move the target automatically to 80 ticks from there. And so what we don't want to do is go limit the upside by keeping the original target in place. We just we adjust it up so that we can continue to participate in the move if the move continues. And in this case, it doesn't continue. It tops out here at about, let's see, where's my initial entry was 73, 74. 19, so 16 points is when it tops out. So I made, how much is that? I made 11 and a quarter on the first, and then 2 3/4 on the second, and then the market pulls back deep, and then it's 9 o'clock and I'm done. All right, now I wasn't present for most of this, so I stepped away at 7:15-ish. So as the market was kind of breaking out here, I had stepped away. And then you get the typical craziness that happens with the FOMC. I think they raised a 1/4 point today. Very dangerous to trade that stuff. It's like trying to fly a kite in a tornado. All right, so we'll see now what tomorrow brings. If I would not expect it to be as quiet as it was today. And we did get a decent move afterwards. Let's take a look at that real quick. So you can see it got pretty crazy here. But we ended down, right? So we down and then up and then down. So kind of right at support too. So tomorrow should be interesting if that support holds or not. If it doesn't hold, then 7,200 is back in play here. So we will see what tomorrow brings us.